The accounting cycle. The accounting cycle is a sequence of activities with the occurrence of a transaction. To start off the accounting cycle is a source document. The source document is a paper document that jots down business transactions that occur in the business. Following the source document would be the journal entries. After each transaction occurs, it will be analyzed in the journal, which is in chronological order. It also makes a short statement to describe each transaction. Next is the collection of T accounts, which is also known as the general ledger. This is where debt will be transferred. This step doesn't involve any analyzing. The T accounts are recorded according to the journal entries. You will have to find the balance in a ledger account. The debit side total and the credit side total should be balanced. The total of the accounts of debit and credit balances equals. A trial balance may be used to detect if debit and credit equals in the total and see if any errors are made. If the debit and credit total does not equal, this shows that there are errors made in between. You sum up the balances of all the accounts to calculate the trial balance. Adjustments are transactions that connect with the business which haven't been journalized by the end because those accounts might not affect the transaction immediately. Adjusted trial balance is a list of all accounts and balances included in the T accounts after the adjusting entries. The adjusted trial balance is to make sure that the debit balances and credit balances equals. Closing entries are journal entries used to transfer balances of temporary accounts to permanent accounts. Revenue, expense, and capital withdrawal accounts are temporary accounts. After the closing entries, these account balances will be indicated in the capital entry. The last step of the accounting cycle is a financial statement, which quantitatively describes the financial condition of a business. The financial statement includes the income statement, balance sheet, and often includes a cash flow statement. It is usually assembled quarterly or annual basis. This is the balance sheet. The balance sheet shows that the current condition of the business is terms of assets and liabilities. The basic formatting of the balance sheet is set up with two sides, left side for the assets and the right side for the liabilities and the owner's equity. The assets include the items such as cash, inventories, and accounts receivable, which is amounts that are owed to the company by the customers. On the other hand, the liabilities, which include bank, which is the money that the bank owes, and accounts payable, which are amounts owing to the creditors. After listing the assets and liabilities and the owner's equity, the total assets and the total liabilities plus owner's equity must be equaled and double underlined. Revenue recognition convention is one of the GAAP, which stands for Generally Accepted Accounting Rules. GAPs are specific rules, practices, or procedures that accountants conform to. Revenue recognition convention provides revenue being recognized in the accounts at the time where the transaction is completed, which is just recording the revenue when the sale is completed and the cash is received. This will be an example of list of transactions. Just note that for the date, you do not have to put the month for each transaction. Only the first transaction will need to include the month. This is the journal according to the previous transaction. You will only have to write the month once for the first transaction. The format of each journal entry is debit first, then the next row is credit. When you write the particulars for debit, it is against the margin, and the row for credit, the particular is indented. The last line of each entry will be a short statement about what happened in the specific entry. The second transaction will be occurred in January 5th of 2011, which stated that Mr. Lee received Hong Kong's electric bill $100 to be paid by January 20th. Therefore, we will debit the electricity expense, which will be on the first row of that entry, and under debit 100 will be plugged in. For the second row, indent will be required, which is accounts payable Hong Kong Electric, and under credit will be 100, which will balance with the debit. The last line of the entry will be a short statement describing this transaction, where I wrote received bills from Hong Kong Electric. Journal entry. This is a journal entry for March 2011, the second transaction on the 5th, because it is debited the accounts payable of Hong Kong Water 200 and credited the bank 200. I assume that the company paid back the owing amount to the Hong Kong Water, which is 200 cash. Another example would be the fourth transaction, where G. Lee drawings is being debited and the fees earned is credited, which means that money is being withdrew in its earnings, so the amount of money being drew out will increase. This is a general journal, and there are some errors on this journal. The first mistake that I am going to point out would be the missing date for the second transaction. Each transaction must include the date, however the month and the year is not necessary because it is already shown on the first transaction, which is 2011, and the month April. The second mistake will be the order of the revenue and bank for the first transaction. They should be reversed. Because when the description says performed service, which is earning money, and for the revenue has less money than the bank, which makes the revenue to be credited and the bank to be debited. This is called a chart of accounts, which is a list of accounts that a company has established for recording the transactions in the T accounts. Each transaction is assigned a name and a unique number where it will be recognized easily. The first digit of the account number will be a sign of the account is assets, liability, etc. In this case, when 1 is the first digit, it signifies assets, and when 2 is the first digit, it stands for liabilities, and etc. Here are a list of accounts, and in the next slide we will be creating a financial statement, which in this case will be a balance sheet according to these accounts. As you can see, assets is on the left side, and liabilities and owner's equities are on the right. You first look at the accounts and put them into the three categories. For example, accounts receivable, bank, office equipment, supplies, automobile, and G League drawings will be under assets. Bank loan, accounts payable, net income will be under liabilities, and lastly, G League capital will be under owner's equity. The total assets should be equal to the total liabilities and equity summed up. So this is basically how the accounting cycle works. Start off with source documents, then journal, ledger, adjustments, trial balance, adjusted trial balance, closing entries, and finally the financial statement. Thank you.